Hello traders, you're welcome back to the Forex Geek channel, and in this video we are diving into the 5 price action rules that every trader needs to know. Now, whether you trade Forex, stocks or crypto, these principles will help you read the charts clearly and make smarter trading decisions. So let us just get right into it. So first of all, you must identify market structure. This is the first rule. The first rule is to identify market structure. How do you do that? Ask yourself, is the market trending up? And we're going to be really practical about this, right? So right now, from what you can see, is the market trending up or down? Depending on the time frame that you want to trade on, obviously. So using the 4 hours as an example, you need to identify the trend first of all, connecting the lows. This was an uptrend, but at this point in time, the structure seems to have changed, right? We seem to be having a downtrend right now, okay? And you can see that this is high, low, okay? Let's use the general. Okay, let's just remove this and put another one. Okay, so we have the high, this is low, this is a lower high. So if we have a lower low, then it means that, of course, the structure has changed to a bearish structure. So, currently we seem to be having a bearish structure forming right now because the bullish structure has already been broken. So you must identify the market structure. First of all, is the market trending up, or is it trending down, or is it moving sideways? Higher highs and higher lows means an uptrend. Lower highs and lower lows means a downtrend. Recognizing structure early keeps you from trading against the main flow of the market. Okay. Now, the second rule is to understand candlestick patterns. Each candle tells a story about buying and selling pressure. So you have to learn how to spot reversal patterns like pin bars and engulfing candles, as well as continuation patterns that signal the trend is likely to keep going. Now, this is the language of the market. Okay, this is the language of the market. The third rule is recognizing supply and demand. Now, just elaborating a little bit on the second rule, which is understanding candlestick patterns. Severally in my videos, I've talked about looking for candlestick confirmations, and when we're talking about candlestick confirmations, we are mostly talking about those candlestick patterns like the pin bars, the engulfing pattern, and all of that, right? So now, to be very practical about it, you can see that at this point, when we had the structure change from a bullish structure to a bearish structure, you can see that here there was a false breakout, and then we had another, smaller bullish structure form here. You can see higher highs and higher lows. This is actually a bullish structure forming here, right? This is when the buyers and the sellers were still struggling, because this was a more profound, bullish structure, and then at some point there was a false breakout, and then the bulls tried to come in again, but then they failed. Now, after the bulls failed, if you look closely, you'll see a bearish engulfing pattern that came up around here. So this bearish engulfing pattern shows that the bears are already trying to take control, or they are starting to take control. Now, this bearish engulfing happened, and then we had another candlestick pattern with strong momentum. This momentum shows that the bears have entered. The bears indeed have entered the market. They have taken control. So now we had a strong, first leg, and then we had the pullback, and then now we are seeming to have, it's looking like we are about to have, a second, impulsive bearish move, a second bearish impulsive move. All right, you can see that even this candle, shows that there is actually bearish momentum in the market at the time. Okay, now let's get to our third rule, which is recognizing supply and demand zones. Okay, supply zones are areas where sellers step in and push price down. All right, Areas where sellers step in and push price down are called supply zones. Okay, remember that it's a zone, not necessarily a price point. It's not a specific price level, it's actually a zone. Okay, so it could be a range of price levels. Now, demand zones, on the other hand, are zones where buyers step in and push the price up. Okay, so those are called demand zones, right? So just like the case of a supply zone, a demand zone is also a zone. As the name implies, it's actually a zone. All right, those are areas. If you look at your chart, you can be able to identify some areas where even if you backdate it, you might see that price seems to be respecting that level perhaps for a while. Okay. Now, when you are able to spot these important levels, your supply zones and your demand zones, if you spot them in the market, they are turning points in the market. So if you spot them on time, it can give you high probability trade setups. Now, the fourth rule is to spot the trend strength. It is very important that you always measure the strength of your trend. You look at how fast price moves in the direction of the trend versus how it moves against it. Um, so now, strong impulsive moves followed by weak pullbacks actually show a healthy trend. For example, this is a bullish trend, right? And just like I said before, price does not move in a straight line. So you're going to be seeing, impulsive moves, corrections, and all of that, right? So basically, when you find a strong impulsive move and a weak pullback, strong impulsive move again, weak pullback, and so on and so forth, it shows a healthy trend. Weak moves with deep retracements might signal a possible reversal. Now, the final rule is manage your trades with precision. Price action is not just about getting in, okay? It's about knowing when to get out. So you need to have a clear plan for setting your stop losses, locking in your profits, and letting your winning trades run while cutting losses quickly. Okay, you need to cut your losing trades quickly. And then you are good to go once you understand these 5 rules. Price action trading is powerful because it removes unnecessary noise and lets you focus on the pure movement of price. By applying these 5 rules, market structure, candlestick patterns, supply and demand zones, trend strength, and precise trade management, we can trade with confidence and clarity. So if you found value in this breakdown, hit the like button, subscribe to the channel for more straightforward, no fluff trading content, okay? Let us keep learning and improving together. Thank you for watching. I look forward to seeing you in the next video. Happy trading.